What's going on, everyone? 61% of the S&P 500 closed down in the red today, and the market was a little bit of a chop fest today, but there was still a fair amount of selling pressure, not only in the S&P 500, but just across the entire market, as Bitcoin actually fell back below the $100,000 mark. We have a lot to talk about today, and as you all know, the market is heating up big time. You could either make this work for you, or you could have it work against you. In today's video, we're going to talk about everything you have to know and some of the hottest stocks to keep on your radar for tomorrow. There is one more trading day left for the week, so let's make it a good one.
Yeah, it's been a crazy week here. We've had the FOMC event, of course, cause a lot of volatility, and I think today was just a big consolidation day out of the entire market. The SPY from open pretty much just had a slow chop to the downside, pretty much closed even for the day, down only 0.03%, so not much going on there. But I noticed Bitcoin was down a bit more, down around 2%, and some of the lower price crypto coins, I should say, like Shiba or some of the other ones are down quite a bit. So I am a little bit worried here, Mike. Like SHIB's down 8%. We had XRP USD fall down a little bit as well, down 1.58%. So whenever we see these on a daily chart, they are up so much over the past couple of weeks. I honestly think that the pullback, if we're going to see a true pullback, it's just now getting started. And some of these are still around key supports, like XRP is kind of straddling this $2.20 area. If we start to see a true breakdown of this tomorrow and the next couple of days, it could get a lot more bloodier.
Yeah, the thing is that the market is in a period of increasing volatility, so we are going to see bigger, stronger moves in both directions, and that's not necessarily a bad thing. A lot of times, it's during times of increasing volatility where the best opportunities are presented. Of course, you have short-term opportunities riding the move lower, but when these major dips happen, they often offer great opportunities for like long-term buy and holds, and we're going to talk more about that as time goes on. But like another thing that is certainly worth noting is that this recent increase in volatility truly is historic. We can see by looking at this headline that the increase in the volatility index that we saw yesterday was the second largest spike in history. That is crazy to say, and what this ultimately shows is what we are seeing in the market right now is serious. This is not just any little pullback or, any normal week. Like, we are seeing some serious changes right now, and we are set for a crazy next couple weeks.
Yeah, and one of the craziest things, Mike, to say is that one of the third largest increase actually happened earlier this year on August 5th, which is funny, up 64%, and it looks like now we had another one this year at 74%. So talk about some volatility, and we're seeing this on a year where the overall market has done very, very well. So, just because we're seeing like the VIX pop up in the short term doesn't necessarily mean that the overall uptrend is over either. I know a lot of people are looking at this dip for a possible buy, and I definitely am too, Mike. I'm giving it some time to play out, though. I'm being a little patient with it, but I think there's going to be some very nice discounts here in the near future. And I know today the price action was pretty volatile once again. If we go back to the VIX, it didn't quite meet the high from yesterday. I'm not sure that it could, considering how volatile we'll say it really got, but it was nice to see it moving towards that again. And I would say for tomorrow, watching that high of day yesterday around $28 to $30 on VIX could be great. And UVXY is definitely on the radar again, which was up 13% today, even though the VIX itself didn't break the high, which I thought was extremely interesting there. UVXY is playing out in kind of a funky way.
Yeah, so basically, like when you look at tickers like UVXY, they capitalize off of increasing volatility, and essentially what it is really capitalizing off of is the VIX futures. We can explain the in-depth details about this for hours, but the main thing you need to know is that if you want to trade volatility, UVXY is a great way to do that, and that ETF moves in a pretty extreme way, so definitely keep it on the radar. And like you said, Tom, we definitely mentioned that a little bit yesterday, and there's also ETFs like SQQQ and SPXS that also have that like crazy explosive potential if we do see some, real selling pressure continue. But as we all know, the volatility index index isn't the only thing moving in a crazy way. Ticker symbol MU, or Micron, had their biggest drop since 2020 after they reported earnings yesterday, and they fell by over 16%. And, Tom, this only adds more fuel to the already burning and existing fire in the S&P 500.
Yeah, definitely. This was already a bloody week for a lot of tech stocks. Chips have been weak recently, and MU adds more fuel to the fire, as you said. And with their earnings here, Mike, it looks like they actually met revenue expectations. They beat on EPS, but the thing that was really negative with MU is their headline for 2Q expectations here. So, Mike, they were actually expecting $7.9 billion in revenue for the fiscal second quarter. And get this, analysts were expecting $8.98 billion. So they missed this by over $1 billion there on that expected revenue. So this is pretty bad. Now, keep in mind, this is more of an outlook. Like I said, on their current actual report, it wasn't too bad, but whenever you have an outlook that misses like that, it's definitely a bit of a worrying sign. So they definitely had that bad gap down on the chart. I will say, though, there's a huge support here on MU in the short term, and looking at the Bookmap, $85 and $84 are clear buy walls. There were multiple bounces off of 85 today, and the buyers restacked there after those bounces. So that area is going to be on watch 100% tomorrow. Shout out to Bookmap for the X-ray vision, as always.
And then, Tom, how about that $90 level as well, with 140,000 shares stacked up? So don't forget about that either. There's a lot of action at 90, 85, and 84. So keep these levels close on watch. And while that certainly isn't the best news for chip stocks, as we all know, Tesla stock has been crazy over the past couple of weeks, and it's starting to enter pullback mode as well. So, Tom, what is going on here?
Yeah, this is pretty rough here. Tesla is starting to enter a pretty rough downtrend, Mike. There are some levels that I'm watching in the short term. Today, I was pretty surprised to see it bounce right around 430 at the end of the day and hold that area pretty well. I am watching a bit of a downtrend on Tesla in the short term. In after hours, it looks like it's starting to kind of test this area. So I will be watching 440 and 430 as the main areas of support. But Tesla's definitely pulling back here with the overall market, and it all really started yesterday whenever the market started selling off, right? Tesla peaked yesterday. It actually made a new all-time high and then came roaring right back. So we're only a couple days into the actual pullback. I would not be surprised to see a little bit more consolidation before we see a true move to the downside. But at the end of the day, Tesla is starting to see a lot of weakness come in the short term.
And as we know, Tesla stock is not the only one struggling, but I will say that $420 to that $427 area will be critical in the short term. If we see a major break below that, that will be a major warning sign. So do not ignore this area. The buyers are holding that level in a strong way right now, but if it gives out, that dynamic will change. But just when we thought things couldn't get any crazier, there's also some problems going on with the government. Surprise, surprise. There was some government shutdown talk, but Tom, fill us in.
Yeah, this is pretty nuts here. So yesterday, apparently there was a deal actually reached to avert a government shutdown, and it's kind of funny here. So as we know, Trump and Elon have been pretty vocal about, we'll say, stopping a lot of unnecessary government spending, right? They came out with DOGE, the Department of Government Efficiency, headed by Vivek Ramaswamy and Elon, of course, and I think that this is pretty cool. So apparently, they ended up stopping this bill. Elon came out in a huge opposition against this, and apparently Trump got on the side of Elon, and then they ended up stopping the bill. Now, the cool thing is that today, they actually did come out, and they got a new bill and a deal reached, so it looks like they are going to be averting a shutdown again, but this new deal has to be voted on. Looks like sometime tonight, Trump did put out a statement about this on social media, if you guys want to go check that out. But nonetheless, Mike, looks like they'll be voting to possibly avert the shutdown tonight. At least they got a deal reached, though, after all this mess. But imagine if this starts going on with every bill that happens. There's going to be a lot of crazy headlines the next 4 years.
Oh boy. Alrighty, Tom. Well, everyone, as we know, is glued to this SPY price action. It's been chopping around a little bit today, but definitely closed pretty close to its low, which definitely does show a decent sign of weakness. What are the most important levels to watch in the short term, and what should we keep our eyes on?
Yeah, there's a few crucial spots here on the SPY in the short term. For resistance overhead, I have to watch the high from today right around 593 and 594. 594 is a pretty good resistance in the past, but I'm definitely going to respect that high of day from today, and I'm even going to watch the 590 range, which it had multiple bounces off of as well. So those are two areas to watch if SPY rises tomorrow morning that we might see some hits off of. But I would say more majorly here in the short term, and I had to go out pretty far on a chart to find some of these levels for SPY, but there's a pretty big low recently right around 581 to 583. If this range starts to give out, that's where I think the real selling pressure will start to happen with SPY, and this would be right below the low of yesterday, right around that 583 mark, but there was that hit from the past right around 581, 582. So I am watching that area very closely tomorrow. For the short term, my own personal analysis, I think that SPY is chopping around and consolidating. It might even consolidate a little bit more tomorrow before really breaking down. But the main thing is identifying that true break of the recent low and riding that good momentum whenever it comes in.
Yeah, like when I look at the market in the short term, of course we can have small periods of consolidation and chop, and, that's to be expected. But I will say, with everything going on right now, I think for those who are looking to buy the dip, I think there will be better buying opportunities later on. As we enter periods of increasing volatility, they can get a lot crazier than most people think. As we've seen multiple times throughout history, when we do see real selling pressure come into play, it is very rare for everyone to go from just freaking out, in the case of VIX at least, to the second highest intensity in history, to just like going to the next week and everything's all sunshine and rainbows. Most of the time when we do see periods of panic like we are seeing now, it tends to last at least for like a couple weeks. Of course, every situation is unique, but I will say increasing volatility is something to be expected in the short term, and this does not have to be a bad thing. There will be a lot of opportunities brought up because of this, but it's all about how you capitalize off of it. And, as we talked about in yesterday's video, you have to adapt. You have to have stop losses and follow the money and be willing to flow with the trend changes as they happen. Now's the time to really prioritize trading in a smart way. But on some other news, Tom, we do have somewhat important economic data set to release 1 hour before the market opens, which will just add, more fuel to the fire.
Yeah, there's going to be a lot of fuel added to this fire, Mike. It's like we're adding jet fuel to it now. We have the PCE index reporting tomorrow morning. This is pretty big. So PCE data is actually the Fed's preferred inflation gauge. So definitely be ready. This has been a big week for the Feds between the retail sales, the GDP growth rate, the FOMC meeting, and then now the PCE data. I mean, gosh, it's been a whirlwind this week. So definitely watch out 1 hour before the market opens. If this suggests that, like, let's say inflation is calming down a lot, maybe that'll subside some of these short-term fears. But, like, let's say the PCE data suggests that inflation is rising a little bit more. I think the floodgates might open a little bit.
Yeah, we shall see. And then looking at earnings for tomorrow, we're basically in the clear besides like Carnival Cruise Lines. And that report's before open, but honestly, it's not going to be like the craziest report ever. But either way, keep it on your radar. And besides that, Tom, let's get right to the good stuff, which are some setups and predictions. A stock that is close on my radar is Apple, and it is in a bearish way. Apple stock has been increasing very consistently ever since the beginning of November, and it is starting to show a little bit of weakness. What I like about the setup here is that it actually had a decent update today, and I like that as like a better buying opportunity as opposed to some other stocks that are like super close to their lows. I think Apple is in the process of forming a new downtrend, and it's at the point now where it just had like a temporarily pop up in that broader term downtrend, which makes for a better reward to risk setup. Either way, Apple's on my bearish radar, and I would not be surprised if we saw a little bit more of a pullback with this one over like the next like week or so.
Yeah, I thought that was a pretty cool hit this morning, how it held that resistance around 252 and really bounced down off of there. I'll definitely be watching this one in the short term. Back to the downside, Mike. With my first setup, I'm looking at Tesla back to the downside as well. I know that we talked about this one a little bit earlier, but Mike, I'm definitely going to watch that low from today around 420, everybody's favorite number, Elon's favorite number. So if we do end up breaking below 420, definitely watch it down. I actually like that level so much, I'm going to create an alert there. So definitely have this one on the radar for a potential move. We've been seeing a lot of weakness, and honestly, Mike, Tesla, in my opinion, is just starting the majority of this short-term pullback.
Alrighty. Another stock that is close on watch is Palantir, and as you might think, it is to the downside. I love this company for the long term, but they've just been crushing it so much, where to the point they are very overextended, and we are starting to see like real weakness come into play, not even just with Palantir, but even just more so the market as a whole. Palantir has actually been holding up in a pretty strong way over the past couple of weeks, so it has been kind of like lagging with this like recent short-term downtrend, especially over the past couple of days. But I really like the reward to risk, again, playing this one in a bearish way where, let's say in the worst case scenario, the stock stays strong and, maybe the stock gets stopped out around that like $77.80 area. And right now the stock's right around like $74.50. You risk that much, but like in the event we do see a pullback, I think it's certainly reasonable to see a pullback down to like 64 and maybe even lower, depending on how intense it gets. Either way, I really like the reward to risk associated with it, and it is certainly going to be close on watch.
Yeah, and with my next setup, Mike, I'm watching Joby to the downside. This one might take some people aback because Joby has been pretty hot in the short term, as has ACHR and some of these air taxi companies. Looking at ACHR today, it started to kind of double top in the short term around $10, and it's falling over too. But I actually like the downside move on JOBY a little bit better because Joby's pulling back through a pretty major short-term double bottom and support around 740 to 750. So I'm really glad to see this. And with the big move today, I think it's kicking off a multi-day continuation. So I'll be watching for another move down below the low of day today, right around $7.20. So if we see a good pullback below there tomorrow, watch Joby down. These stocks have been really hot in the short term, and we loved the move higher, but you have to be willing to adapt to market conditions. And in the short term, we are seeing a pullback here.
Yep. So either way, keep it close on watch. And Tom, it's kind of heartbreaking to see ACHR falling the way it is, but not everything can just moon for weeks upon weeks. But it has been a crazy past couple of months, especially with this one. But I definitely agree with you. There's a decent amount of weakness coming into play here. But either way, we are all set for today's momentum plays. And with the first one, we have SMCI to the downside.
SMCI just cannot stay away from this support around $31. So if we see a break under $30.80 tomorrow, keep watching it down.
Alrighty. With the next one, we have SoFi to the downside again.
Yeah, SoFi, I really loved it to the downside yesterday. There was a clear support, and it tested it at the end of day today after this consolidation. So if it breaks under 1485, keep watching it to the downside. We just have to get through this chop.
All right, and then with the last one, we have Lemonade also to the downside.
Lemonade, yeah, they were doing great over the past couple months. They're starting to pull back in a pretty good way also. If they break under the low of day and 3770, then keep watching them down.
All right, sounds good. So we have Lemonade, SoFi, and SMCI on watch for potential moves to the downside tomorrow, if and only if they break through the current levels. Basically, the stronger and more consistent these stocks move, the better these setups become. These stocks are volatile, so as always, you have to be willing to adjust and flow with the changing trends as they happen. Risk management, especially with volatile stocks like this one, is extremely important, and it is something that you cannot trade without. Having and respecting stop losses is crucial to successful trading over the long term. If you don't manage your risk, it's almost impossible to succeed. If you want to learn more about that, check out the Key Lessons channel in the StockedUp Discord. We have a bunch of great free information there. But Tom, we are all set for today's 603 $1,000 big money trade, and we are looking at ticker symbol BSX, and more specifically, the $82.50 strike put options that expire pretty soon, actually, on January 17th of 2025. I will say this big money trade is somewhat similar to the one yesterday, where it is very high risk, very high reward. If we do see a continued sell-off in the market in the short term, these puts can do very well, but these put options are also decently far out of the money, which naturally makes them have a lower probability of expiring in the money. Basically, this is like an insurance policy where if BSX tanks, it can do very well, but it'll really only pay out if the stock sells off a decent amount. Of course, there's been a lot of increased bearish momentum and selling pressure in the short term, so it's not unreasonable to, look at trades like this one, but before actually, placing and following them, you really have to understand what these trades are, trying to capitalize off of.
Yeah, this is a pretty insane trade, Mike. There is a little bit of time to this one, of course, being in January. Fairly close, though, I would say. I'm really happy with the way BSX is pulling back under this range. It's been range-bound for a couple of weeks. You can see how defined that range really was. And today it tried to come up and, retest that range. If we start to see another pullback tomorrow or the next couple of days, especially out of the overall market, this could be a great play to kind of capitalize on that. So, I'm a big fan of this, Mike. Boston Scientific, it has had a great year. I'll even say a great past 4 years, going back to 2020. It's been one hell of a recovery, but in the short term, I'm definitely pretty concerned about this range giving out, so I don't blame the big money for looking at these short-term puts here. And I would almost go as far as saying that the big money might either be doing this as a hedge, like maybe as some shares that they have that they think there might be a short-term downtrend, or of course there is always the possibility that they short this, but either way, I do like the range break.
All right, sounds good. Well, either way, keep this one close on watch going forward. And before we continue on, we have to give a giant shout out to today's member of the day, Scrapper Steve in the StockedUp Discord, who had a great post in the Profits channel today with some coin put options that popped up by 187%. So there we go, and huge shout out to you, Scrapper Steve. Keep up the great work going forward, and seeing screenshots like this one are pretty awesome. And, shout out to you for also attending the live events and being an active member of the community as well. If you guys are new to our YouTube channel, first of all, welcome. But second of all, consider obliterating that subscribe button to get our videos recommended to you more often. We post all the time and cover the most important news, information, earnings, big money plays, and events that, you just have to know about in the market. It takes us hours to make these videos, and we try to cover all information in about 20 to 25 minutes or less. So consider subscribing and you'll get our videos recommended to you more often. But as we look at the market right now, it is a very exciting time to be a trader. It might seem scary that the market is selling off, but as a trader, your job is to adjust to changing conditions. It would be much worse if the market was just chopping around and not doing anything. When you see big explosive movement, not only does it present amazing opportunities that you wouldn't have otherwise had, but it also presents great opportunities to build a solid portfolio and buy companies for discounts that you can hold for as long as you like. So understand that some of the biggest opportunities come in situations like we are seeing developing now. This is an exciting time to be a trader. Be ready for crazy action going forward. And if you guys have not already tried out Bookmap, definitely check it out. We've been raving about them for a very long time now. And it's basically like X-ray vision for the stock market. As we can see with the charts listed, you can see exactly where key buy and sell orders are lined up. And these points end up being major pivotal points for stocks. And given that we're seeing, increasing strength and intensity of trends, now would be a pretty good time to try out Bookmap, especially if you haven't already. You can save with the StockedUp link in the description in the comments down below, but definitely check it out. It's definitely a game changer, and now's a great time to try it out if you haven't already. Besides that, thank you all so much for watching, and let's crush it in the market tomorrow.